Alright, after watching this video, you stop trading this way. This is the Era Traders Effect. Welcome back to our YouTube channel. In this video, I'll be showing you how to trade trends properly, how to see the trend and follow the trend. Because basically, what you want to do in the market, you want to basically follow the trend, right? The trend is your friend, so you don't want to be doing anything that is outside the trend. So when the trend is bullish, you follow the bully trend. For example, you see the market giving us higher highs, higher lows. You know that the market is on an uptrend, and basically what you want to do is that you want to be buying the market, right? But basically, the problem now is you have identified that okay, you're going to buy, but you don't know exactly where to buy from. You don't know exactly where to buy from, right? This is where this video comes to play, right? You don't know exactly where to buy from. You want to be buying from a discount zone, right? You don't want to just buy anywhere, right? So that's why this video is for you. So when you have identified, okay, the market is bullish, okay, what next? What do you do next? After identifying, okay, I'm bullish on this market, right? The market is bullish. So we have two types of trends. We have basically theory. We have uptrend. The market can either move uptrend, downtrend, right? Downtrend and consolidation, right? That is ranging market. Consolidation is also ranging market, right? So when you see that the market is taking out the eyes of of the eyes of the price, that is the eye, right? The market tends to keep on taking out the eyes, and until there's a change of character, there's a change of trend, which is called the market structure shift. When there's a market structure shift, which is MSS, then you are not expecting to go down, right? But I'm not talking about that. I just want you to know how to follow the trend, right? The trend is your friend, so you want to follow the trend, right? So after seeing that the market has taken out the eye, for example, when you're seeing that okay, there was a break of structure to the upside, maybe on the daily time frame, right? On the daily time frame, for a low, for a low to be valid, for a low or an high to be valid, high slash low to be valid, take note of this. It must it must first sweep liquidity, right? It must first sweep liquidity. Liquidity is the main driver of the market. You all know that. So it must first sweep liquidity. So when I mean sweep liquidity, if the market, the low, this low is just empty, this low is just empty. There was no sweep of any previous low before breaking structure. This low, I wouldn't want to be taking any POI, any of my POI from here. I want to, I will be very skeptical trading this, right? But when you see that the market gives you something like this, okay, right, before the break of structure, this is the kind of trade you want to be taking. I'll show you examples. You want to be taking this kind of trade. Normally what people do is, oh, because this is a resistance level, and whenever resistance breaks, it turns support. So they tend to wait for price to come to the resistance level and buy. But it's not always so. It's not always so. In fact, price might even come all the way down here to do something like this and before pushing, and then you get stopped out again. You be like, oh, he broke this. No, 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 don't do that. So you wait for this, and I taught you guys how to use your Fibonacci. You see, your Fibonacci, you take it from the low to the high of price. Then you want to be buying from the discount. So any POI, any other block, you want to, any demand or supply zone will be at your discount or your premium level. For a sell, your premium level; for a buy, your discount level. So after seeing a sweep, then this makes this low to be valid. It's as simple as that. It makes this low to be valid, right? Then you want to be buying from any PY. This is a QMD, so you want to be buying from either the other block that failed, right? Or there's another block here. So you can even choose anyone you want to buy from, and you wait for price to do something like this, retrace back into your POI, then you want to be buying from there. I hope this is clear, right? So basically, this is for the buy setup, right? This is for the buy setup. Yeah. So this for the buy setup, right? This is for the buy setup. I want to show you for the sell what you should see before you. So on a normal downtrend, the market keeps on taking out the low, break of structure to the downside, and most people think, oh, break of structure, support some resistance, they want to be selling from there, just like that. But it's not so. The market, if it's like this, everybody will make money. Basically, it's very simple. Everybody will make money. But you see the market do something like this, comes here, come here, might even do like this and come down, and you see something like this, go up, go up, go up. You get what I'm saying? And this is how you just be seeing the market in the real sense. You'll be confused. Is it on an uptrend now? Is it on a downtrend now? You might even do something like this and come down. Do you get? So basically, looking at this kind of setup, you'll be confused. Is it on the downtrend? That's why you must understand range, right? A range, a swing structure, and all. So looking at this, the valid high here, this was a valid high because there was a sweep of liquidity before there was a break of structure. So price shouldn't take out that high. That's one. You see, there's a break of structure again, a break of structure below here, right? A break of structure below here, and there was a sweep before that break, right? So this makes this high to be valid, to be protected. That means price will not take out that high. So you can look for your order block at this level to sell from. So looking at this, you will not be saying, okay, oh, it has broken trend. I will not be looking to buy. No, because you are still in this range. You are still in this range from the high to the low. And also mind you, this is also a strong low because it swept liquidity before a break of structure. I don't know if you get what I'm saying. So you could be buying into the previous zone. This is a range from here. This is a range from this high to this major low. So this is a range until one of them breaks before there's a change of character. So if you understand that, you know that definitely you are still on a downtrend, but a minor bully trend is just showing. So we have two types of trend. Major trend. There's a major and there's a minor. So two times categories of trend. You have the major and the minor. So let's dive into the charts. Let me show you practical example of what I'm talking about. You might not get this now, but practical examples of this. Also, I can just tell you that this is structural liquidity. Most of you don't understand, but this is structural liquidity that confirms our POI. So let's dive into the chart to see some examples. So for the past, I think 1 week, for the past 2 weeks, 3 weeks, selling uh, I've been selling VIX 75. So let's see why. So I looked at it from let's just start from here. So you can see clearly the market is on a downtrend. It's very obvious. Market is on a downtrend, takes the low, right? So how do you know that this high is a valid high? That price shouldn't take out the high. There should be a sweep of liquidity, which it did, right? And what happened? Price there was there was there was a liquidity that was swept. I don't know if you can see that there was a liquidity that was swept above, right? There's a liquidity that was swept, but if you are taking, okay, maybe if you are taking this level as your as your order block, it might not tap in. I don't know if you get what I'm saying. The last bullish candle before the break of structure. So this is what I'm saying. So this makes this, there was a break of structure again, right? Let me take that out. So there was a break of structure again. There's a break of structure, and this is a valid high now. Price shouldn't take it out. So you see, price never even got there, kept on tanking to the down. So another one I just want to show you. One of the things that confirms your PY is your structural liquidity. Structural liquidity. I'll just give you the 5 rules that guides the advanced market structure model, right? First, there must be a sweep, which you had a sweep. There must be a first break of structure, which you had. There must be 50% retracement to the upside, right? Which we had here. This was a 50% retracement above. It's even more than 50%. So you get, so that's a 50% retracement, and there's the second break of structure. So everything is complete. Then our PY above the other block that was the last bullish candle before the break of structure, another block, and that's our PY. So you see how simple and neat the setup is, right? Your stop loss above the protected eye. This is the protected eye that is here. I don't know if you get what I'm saying. So that's the protected eye, and your stop loss is there. Same thing you see for here, break of structure, but this there was no structural liquidity, so you'll be very skeptical about taking this. But you can see how this still worked out. There was a sweep, and there was a break of structure to the down that made that eye to be protected, right? That made that eye to be protected. So you see it, you see it. See, this was another one. There was a sweep, there was a sweep, and we never had a break of structure until this point. So sometimes you might have two patterns, right? But that's not my focus. But just know that this is your protected eye, right? This is your protected eye. Price shouldn't take it since it swept liquidity above, right? And you want to be selling from your order block, your last bullish candle before, but this there was no break of structure. So you are predicting before time that price should do this because oh it's already swept liquidity. I don't know if you get that one wasn't clear. So you see this trade I took, I sent it to my group. I sent this trade to my group. Yeah, I sent this trade to my group. We took this sell. Is a sweep, there was a sweep, there was a sweep, break of structure to the downside, right? Break of structure to the down. Second break of structure, 50% retracement, our structural liquidity that needs to be taken out. Then our PY, our PY, right? Then we should be selling to the downside. Simple. Same thing here again. We did the same analysis. I think I sent it some days ago. And sweep, break, same thing, same thing. That's what we're looking for. Same thing. Sweep, break, the structural liquidity protected by our order block. So we should be selling from that zone. But we find it to have 5 minutes time frame to be selling from the 5 minute time frame POI, right? So let me show you that 5 minute time frame POI I took the trade from. So let me just go to the 5 minutes, right? So on the 5 minutes, you see what I'm talking about. So you see, there was the only valid um so you see that the last there was one here, there was one here, and there was one here. And if you look, this one was the one that the up one was the one that have not been used. So if you look, that was all we used, and we sold from there. After getting our confirmation, we sold from there, and you can see it TP very well. It TP very well. Now I'm still on another one again. Same thing, same thing. Let me go back to the 1 hour time frame. Let me go back to the 1 hour time frame. Same thing again. Same thing. And we're currently on this trade. I can tell you for free. We're currently on this trade. So you see, there was a sweep making this eye to be protected, right? Making that eye to be protected, and there was a break of structure. Um, there was a break of structure here. There's a break of structure there, right? And now this eye is protected already. Here's the other block. This is the other block, right? This is the other block. But and I'm taking this as my total liquidity, although it's not up to like 50% of the range, right? It's not up to like 50% from that eye to this place. It's not up to, but almost 50%, right? But now I went to the 5 minute time frame to look for, because your POI is not necessarily just the order block. It's the whole zone from the high to this low like this, to the up of your structure, from your structural liquidity to your strong high is your POI. So you get, so I went down below like to like 5 minutes, right? You can see we're even in profit. Went down to like 5 minutes to look for another block that have not been used, right? So if you look at this very closely, you see that price haven't mitigated it. So you see this price haven't mitigated it. So this was what I saw. Then I was like, okay, I'm waiting for confirmation. I think I will show you guys where I sent it to our group. So you see, and price gave us a clear confirmation, theory candle patterns. And after I saw that confirmation, I said, now we can sell, right? I said, now we can sell, and we're selling to this now. So this is how it has been. This is how I can show you other pairs for buy scenarios and all, right? So practice this and let me hear your feedbacks on how this works. Thank you so much for watching. God bless you. Please like, share, subscribe. See you in our next video.